Alright, so I'm gonna continue the course, and we covered this whole whatever it is, uptrend over here. So for those who don't know, I'll just quickly go over it and then focus on the next piece, which is the downtrend. Alright, so what happened here, as you see over here, you have a climax. Alright, how do you know? Well, you have a lot of volume and you have big spread, and then what you have here is a lot of volume off the bottom. What he says about this is tape observers who saw this intraday saw a lot of this volume is actually coming from the bottom to the top. That volume coming in from the bottom to the top after that climax here on this, after this climax, the volume coming from bottom to the top is evidence that the climax has passed, meaning that volume off the bottom, or that change of behavior that occurred intraday, is evidence that the climax has passed. It's not evidence that the trend is up or confirmed that is up. It's evidence that the climax has passed. What he says after that is that, you're going to have an automatic rally or a technical rally. It doesn't really matter. Who cares if you call it automatic rally or technical rally? I don't care. But whatever you call it, he's saying that if the climax has truly passed and this bounce occurs, they're going to sell it. They're going to sell it and they're going to break the low. So what he's looking for is some type of bullish confirmation. What is that bullish confirmation? It happens over here where you have a higher low. That's 1, which is broadening the zone of support. That's 2. That matters on a point and figure because you're going to see a big box and you're going to see a lot of X's and O's across that level. Number 3 is the clustered closes. So the last 3, closes, they're clustered. Clustered meaning they show no net progress. So all of that together is telling you something. What's it telling you something? It's telling you that the selling pressure has waned or evaporated, or whatever you want to call it. It's less selling pressure because of those clustered closes and the broad zone of support and the lowering of volume, meaning over here the volume was up, but the average volume in this area is much lower. Incidentally, one of the things that he doesn't talk about, but he talks about this behavior later on in this chart, is the minor climax. So I'm going to talk about that just. Okay, so you see this ruler right there. He doesn't talk about this here, the behavior here, but he talks about it later. What is this behavior here? This is a minor climax, or someone may call it an effort reward. I don't really care what. The whole point is, it's the description given to it is it's abrupt volume. So if you take a look at this is the biggest volume in 1, 2, 3, 4, 5, 6, 7 days. It's abrupt. Alright, it's the volume dip here, and then bang. You can call it effort reward by taking a look at the price range and saying, oh, it's a lot of volume, etc., etc., etc. But the point is, it's abrupt volume. It ends the pullback. Just like the major climax ended the trend, the minor climax ends the pullback, which also will look like a trend on a lower time frame. Like if you saw like a, I don't know, 15-minute chart or something, this piece, this pullback on the daily on a 15-minute chart will look like an entire trend. Anyway, and why else is this important? Why this market is on the springboard at this point? What makes the springboard? Again, there's a climax, rally, pullback, higher low, cluster closes, broad zone of support, all of that together. Clustered closes, low volume, etc. All of that together setting up the springboard into markup. Alright, so then it goes up. Now, up to this point, he says there are 3 places to buy. One was right off the volume off the bottom. If you're an intraday trader, go long. Alright, because that volume off the bottom would look like a change of behavior and they'd be testing and so on and so forth. If this thing was on a 5-minute chart, obviously you would see a lot of volume come up and then pull backs, and they would just keep on going up. So that's the first place to buy on the climax not on the climax, right on off the change of behavior intraday. All right, so that's one. Two is right here on the clustered closes. Why? Because its selling pressure has been waning. How do you know? The clustered closes, the low volume, the broad zone of support, all setting up the springboard position. That's the second. And of course the low volume, relatively speaking, to the rally, which is only 2 bars, but it's significant volume, etc., etc. Okay, so that's the second place to buy on the pullback. He hasn't said this, but I'm telling you, if you'd asked him if he was here, he would tell you that that minor climax right there is the bar afterward or right after it or something. That would tell you that that pullback has ended and to get long. Okay. Anyway, so the third place to buy is on the breakout. The breakout here, what did he say about it? You can buy it when it makes a new high. What else does he say about it? He says it's final confirmation. Final confirmation of what? Of the trend. What about the trend? It's an uptrend. Alright, so the three things are regarding confirmation. One being the change of behavior, saying that confirms the climax has ended. This right here on that springboard position confirms that you have a what is it called? An uptrend. Okay, but the final confirmation of the uptrend is the higher high, and that occurs here. Okay, and he doesn't really talk much about this bar up, but on the downside he starts talking about this. On the downside, when they had a big bar like that, he says that it's because the sellers are gone, and people realize that, and that's why a little bit of pressure, a little bit of buying can cause a big bar up, because overhead supply is gone. And in this case, over here, he says, the buyers are gone. So it's the same logic to the wide-ranging bar. Anyway, I'll get to that later. He says regarding the buying, you buy the new high, but it's the worst place to buy because of the risk. After that, he starts looking at this behavior and noticing that the closes are clustered. What does that mean? That means that they're not making a lot of progress. What else helps confirm the clustered closes? The shortening of the thrust. What does he mean by shortening of the thrust? The distance between high to high to high. The high to high to high is shortening, and the closes are clustered. What does that all mean? It means A, buyers are not willing to buy at higher prices, and B, it's hard work to advance the market. As that occurs, you have this. Again, the concept of the minor climax comes in. What happens here? Well, what happened is there was a stalemate here. Okay, the concept of a stalemate means that the bulls are unable to advance. Why? Because of the cluster closes, because of shortening of thrust. It's hard work to take the market up. So what do? They make a made-to-order maneuver that goes up, trapping longs, comes right back down. So this is like a minor climax and a reversal. All right, and he says this. He calls it I think a minor buying climax or something. So the point here is that this terminates the move, and it is the result of a stalemate from these bars here. The stalemate is cluster closes, shortening the thrust, etc., etc., all telling you that it's hard work to advance the market. So run it up, get in the suckers, and close it right back down, and then drop it. So the market starts dropping here. What does he say about this? He says two things. One, this again brings the concept of the minor climax. Again, you see how many times you mentioned minor climax. Here, the volume increases abruptly, so does the range. It's bigger than 1, 2, 3, 4, last 4 bars. Volume is greater than last 4 bars. Range expands. What do you notice right after that? It's a high-end close. So the lack of this having any fall through and a high-end close. The high-end close itself is indication that the buyers are coming back in. He's ready to buy at this point. Okay, here about this red bar, what he says about it is that the volume here totally dips and it's a higher low. So this red bar is a higher low and the volume dips. That's a bullish indication. After that, it just goes right down and then reverses right back up and initiates the move. Up here, the market goes back to a prior resistance area. What does he say about this? He says that there's hesitation. Why is there hesitation? Because this is a prior top and people are trapped. So there's going to be a hesitation. You can expect that hesitation, and these folks want to get out. So the market over the course of this period is absorbing. What is it absorbing? It's absorbing supply, new sellers, trapped buyers, etc. So it's absorbing over here. How do you know this is absorption and not distribution? You know because it's not reacting even halfway back. That's one reason. And it's hugging resistance. All right. The other thing to notice is the lows are getting higher and higher and higher, higher and higher and higher. They're hugging resistance higher and higher and higher, and then it breaks. I think either in this bar or this bar, that volume shows absorption is over and the continuation occurs. All of this occurs over here. He says this is very high volume. Over here on this bar, you see very high volume and very small amount of progress in the close. There's not a lot of net change. What does that mean? That means there's distribution. The start of distribution is right there. That's what he says. The reason is you have a lot of volume, lack of progress in the close, which means the sellers are coming in. Does it mean that it's going to go into markdown right away? No, it just means that there is distributions, there is selling. Why? A lot of volume came in and there's a lack of progress in the close, which is meaning what? The buyers are meeting sellers. If they weren't meeting sellers, the close would be high end and would make progress. Does it do that? It doesn't. After that, it starts moving sideways, and over here, over this bar is important. Why is it important? Look at the low volume. That volume, he uses it to forecast, saying, yes, it's likely that another rally is going to ensue, because on this third bar, 1, 2, 3, the volume dips. They're not ready to break. They're not ready to break. So a market rallies, it goes back down, and he says this is a threatening bar. But again, what happens right after that bar is the market has no follow through, and the market rallies away from it. So they're going to go higher. Okay. It does that right over here. This is a climactic, and one of the things he calls this an upthrust. And he says the upthrust, and this is a hypodermic maneuver. So it means it's hypodermic, meaning it's going straight up. How do you know it's hypodermic? If you use a ruler, you will notice that the angle of ascent is very acute. It's straight up. That angle of ascent is nowhere else to be found on this trend. It's very sharp acceleration, high volume, and look afterwards, there's a red bar. So that volume has no follow through and the market dips. This is again a sign of distribution. Why is it a sign of distribution? Because the gains were unable to hold. In fact, all that volume on that bar, right after it, you have a red bar, and that red bar takes out its close is lower than yesterday and the day before. So the progress that were made by 2 days is erased by that one red bar that occurs right after the climax bar. The climax bar is this red bar is taking out the prior 2 days, and that is indicating that this is distribution. Why? Because this bar was unable to hold its gains on that much volume. So what else does he say about this bar? It's the first time a red bar has such heavy volume in that entire trend. That red bar has more volume in it on a pullback than any bar in this uptrend. That's why he calls it a change of behavior. What is the behavior? The behavior on prior red bars was that it was lower volume. There was always low volume. The change in behavior is that it is higher volume. So the change in behavior over here is based on the fact that this red bar has more volume than any other red bar in the trend on a pullback. And after that, he looks at this, and he says this is a trouble. Why? Because on this bar, the volume came in. As you can see, it's more volume than the change of behavior bar. But look at the progress in the close. Is there any? It's clustered. That is telling you again, they're selling in the range. Why? All that volume, how much progress? Very little progress, all that volume. Same concept. You have a lot of volume, not a lot of progress in the close. Selling, distribution. Okay, after that, the market breaks, and what's the most important piece? Right there, I said not the most important piece, but a very important piece is right there. What is this bar? It breaks the back of the trend. What does he say about it? He says that all this selling going on, floor traders recognize that stock is being dumped. So what do? They're gonna join the sellers, and they're gonna withdraw their buy orders. So that withdrawal of buy orders and that added pressure is creating a wide range bar. That wide range bar is the bar that breaks the trend, the backbone of the trend. Alright? Notice also the sequence: climax, change of behavior, and this is some type of a breakout. Alright? Climax, change of behavior, and then this is some type of breakout. Here again, climax, change of behavior, and right there is the breakout. That's why I'm saying that these things are similar. Even today, like you will see charts, you will see this behavior. Climax, change of behavior, breakout. Again and again and again. Just be able to recognize it. A lot of times you'll see a climax and you'll see what looks like a change of behavior, but it's very hard to break trend and very hard to say with authority that that's a climax change of behavior and it's going to break. In this case, you just wait and you have a breakout. So there are three, if you want to call it three steps: climax, change of behavior, breakout, trend is broken. Get it? Alright. So now we're up to this point here, and I'll cover this in a next video so this video doesn't go over. You can get all of this information again from reading the Wyckoff course, and just that first study, this very important study, why it has all the key concepts of trend, which are what? Climax, change of behavior, the concept of springboard, the concept of a breakout, the concept of what else? Absorption, the concept of distribution, the concept of all of that, and how to read price and volume, meaning looking at low volume dips, low volume pullbacks, high volume rallies, and then combining that volume, bar volume, with two things. One, the closes, the progress in the closes, to determine whether there's distribution or not. If they have high volume and not a lot of progress in close, it's distribution. And then what you do is you supplement it with shortening of the thrust. Shortening of the thrust supplements clustered closes to indicate that it was hard work to advance the market. In addition to that, you look at the volume, and the volume will tell you that there are less buyers on the way up, and see if the volume is tapering off. So these are pretty much all the concepts that he covers in this first study. Alright, I'm going to be going over the next study. You guys can do the same. Alright, take care. Bye.